doing business in Africa. You can't afford to be without Africa Investor.
I know that I'm going to turn to Ali now, Alastair, who's going to give us an insurance perspective on that particular product, and then to Deepak from the African Trade Insurance Agency, who's going to give us a local African ETA perspective, before I turn to colleagues from the sovereign fund industry who have, like Eamon, Uchi Orji, and Solomon Asamoah, and other colleagues who actually have pipelines and companies in their portfolios that could lend themselves to some of these transactions. So I see a very good triumvirate partnership here between us as asset owners and institutional investors, the ECA community, and Wamkele's public sector constituency to facilitate these transactions. But over to you now, Ali.
Thanks very much, Hubert. Can you hear?
Yes, we can.
Great, thank you, and thanks for inviting me on the call. So firstly, just quickly to say I work for Marsh JLT Specialty, an insurance broker and advisory company, part of the Marsh & McLennan Group. And I work in the credit specialties division, which offers credit risk transfer products, non-payment insurance, political risk insurance, surety products, and the like. So I think Hubert is very good of you to put me after Vinco. So I think what I'll do in these 5 minutes is to explain where the private insurance market sits in relation to these products and the public sector, the ECAs, which Vinco has very succinctly just described. And then maybe I'll move towards the second half of the of my comments, linking the private insurance market with what the institutional investors are doing directly. So where the private insurance market sits in the picture with regards to the ECAs is they actually reinsure the ECAs. So this can be on a single situation basis that we call facultative, or on a portfolio basis, which we refer to. One of the reasons for this is obviously the public sector is much larger, but typically countries have their expertises. The Nordics historically have been big on telecoms, the Danes, wind power, and so on and so forth. And what the ECAs have done, because they have to provide guarantees or finance this business, they tend to have spikes in their exposures, and they can lock the top of these spikes by reinsuring their transactions in the private insurance market. So this is done on a full follow the fortunes basis. So the private market insurers, the reinsurance follows the ECA guarantee or the ECA insurance policy. And it will pay out immediately if the ECA guarantee pays out. This business is really sizable. I think the latest figures provided by Vinco said that the amount of reinsurance was in the region of $54 billion. And I guess what an important point to make is if you're talking about any business really, but I guess the perception of African risk, rightly or wrongly, in my view, wrongly, has been perceived as higher. And there's only so much risk that, be it an ECA or whatever kind of institution, can take. And so they can pass this risk on to private market insurers. So with regards to institutional investors being involved in ECA-backed loans, this has really been covered previously by Eric and Vinco. I mean, our view is that export finance business is profitable. For the banks, they've now got higher costs and funds. There's a drop in margin due to the opportunity to find alternative sources of funding, such as from cheap Chinese loans, for example. And where the institutional investors won't have these costs of funds. And also, as just mentioned by Vinco, the institutional investors have probably got more appetite for the longer tenors as well, which fits well within this class. Something with regards to the private insurance market's interaction with institutional investors, this is a newer space for us. There's work going on there at the moment. We understand that the institutional investors are less keen on assessing project risk. That's harder for them to assess. But once the project is up and running and completed, and we're just talking about payment risk, then there's opportunity for institutional investors to come in there and maybe refinance transactions which had already been financed by the banks. So that is an area which we could perhaps work on. With regards to institutional investors insuring their risks directly, this is something the private insurance market is looking at, but there are issues there which we've got to overcome. So typically for a credit insurance policy, the insurance policy provides up to 90% indemnity. The insurers would like the insured to have at least a 10% retention. They want them to have skin in the game. Whereas for institutional investors, if you're a pension fund or the like, as soon as there's a default, you need to have your claim paid immediately, and you need 100% of it claimed immediately. You don't want to take that risk. And there are ways around this, and it's sort of proprietary information, and that's what we're working on at the moment. But that's difficult to obtain that from private market insurers. Typically, they'd like to have a long track record with the insured. And also that's very different from when they insure the banks, who are the largest client to the private insurance market. It's the banks followed by the ECAs. The banks will typically not immediately be looking to claim. They'll be looking to restructure. And that's what private market insurers want to do. They want to work with their clients to restructure a deal. The deal will then work out. And then that client, if it was a bank, continue to lend to their client. Whereas it seems like from institutional investors, the insurance product would have to be different. It would have to respond immediately without a restructuring, and it would have to respond 100%. But they were my points.
Doing business in Africa. You can't afford to be without Africa Investor.